Maria, results out this morning in line with your guidance. Headline earnings per share down 25.5% for last year. Can you comfortably say that we have turned the corner, that was the bottom of the banking cycle, and that it is going to be an improving situation from here?
Well, I think we have turned the corner. I think last year was a particularly tough year, and I hope we're not going to see too many years like last year. It came on the back of the first recession in 17 years, on the back of a massive global recession. And this year we're going to see a return to growth. But I should also say that it's not necessarily going to be an easy year. I think we still see quite a lot of fragility globally. We're going to see growth globally, of course, but it's going to be a pretty fragile environment. We can see the developments in the Eurozone, and this is not going to be. It's not going to be the easiest year. We still see consumers with quite a bit of debt, and I think there is still something to we still see on the commercial front some degree of concern. We don't expect impairments to peak on the commercial front until the end of the first half of this year, maybe early in the second half of the year. So it's going to be a much better year than last year, but we don't really see a return to a normalized state until 2011, where we expect to see growth really show a stronger performance than we expected this year.
Maria, very good morning to you. It's Eleni here. Looking at impairments, which you obviously alluded to as well, just looking at the fact that you do expect growth to resume at comfortable levels in 2011, are we going to be seeing a new normal? Do you think that we'll be seeing growth levels of between 20 and 30% as we saw during peak times in the banking industry?
Oh, it's very hard. I think it's very hard to say that. I think in part because we are all in a very different regulatory environment, and you just have to see what regulators are talking about in terms of what they expect banks to have in terms of capital, in terms of liquidity, in terms of leverage, and there is a long way to go in terms of that. You saw just from what Basel put out on the 17th of December, the international debates on that. I think in South Africa, we've been very lucky that certainly on the capital side, our regulator had moved quite early. And so I think we are in a pretty strong position. And if you look at our own results today, you'll see that we are in a very strong position from a capital point of view. So we're very well positioned to take, to deal with any regulatory changes. But those kinds of returns, I think, are probably a way off. And so I think to look at returns of in the high 20s is really is not something of 2011. If we get there, it's very far. I think it's quite a way off, actually.
Hi, Maria. Maybe just two questions. Firstly, I must congratulate you on your cost containment. I think that was very well done. But in regard of that, what do you expect going forward? Do you think another year of cost containment, or is there a bit of catch-up spending to do? And maybe just a second one. One expects the impairment levels to peak, maybe be a bit worse. But is there a catch-up in terms of the reserving? Your reserves relative to the non-performing loans is low, and it's an historic levels very low. What do you expect there?
Well, let me deal with the cost containment side first. I think that what you do in difficult times like last year, of course you try and contain costs, and so anything that you can actually hold back, cut, and anything that's not going to damage the franchise, that is not absolutely critical to the business. So my colleagues, for example, in marketing have had to bear the brunt of a lot of the cost cuts, If you look at our incentives, we've cut back on those quite significantly. So there's been a lot of cost cutting in 2009, which was really related to the environment that we were in. I think for 2010, you should expect cost increases in the mid-teens, and that's because we are making significant investments particularly in the IT infrastructure, and of course, if it turns out that the income line doesn't grow by as much as we think it should be growing, then again we will look at our cost line and we will hold that back. We've proved that we can do that, and we will again look at that. So we're going to manage costs, we're going to manage them carefully, but I should also say that you ought to expect costs to rise and to rise above that 50% cost to income ratio. On the impairment side, one of the issues that I suppose as an industry we're all dealing with is the difficulties that we are facing, or the challenge that we're facing, particularly around the flow into our legal book and the arising out of the debt counselling, and of course we have seen an improvement in impairment ratios and the impairment charge in the second half of the year, but we are and we expect to see, certainly on the retail side, we saw the peak in impairments on the retail side in the second quarter of 2009, and we've seen an improvement in that in the second half. On the commercial side, we only expect that to peak in the first half of this year, probably actually in the third quarter of this year. So I think that will continue. That will probably impact on the provisioning on the provisioning as well.
Maria, your asset base down by 7.3% for the year, partly due to the decline in loans and advances. Given that we're seeing flat to negative credit growth at the moment, and also money supply also very flat, what is the scope to grow your loans and advances in the current year if there is just no demand from consumers?
I didn't get the first part of your question, but I assume you're asking what is the outlook for growth in loans and advances?
That's right, yes.
Yeah. We're looking at growth in loans and advances in single digits, but towards the higher end of that. In particular, provided of course that the economy does grow at 2.5%, and that we see reasonable growth in the overall economy, that we don't see further increases in unemployment, because I think that really is one of the risks to any of our forecasts.